There's a question a lot of small business owners are quietly carrying around. And when one of them finally typed it out on a forum recently, 80 other owners showed up to say they felt the exact same way. It went something like this. I tried QuickBooks. I tried a couple of the others too. And honestly, every one of them feels like it was built for accountants, not for someone just trying to run a business. All I want to know is whether I made money this month, where my money is actually going, and what my real margins are. That's it. Instead, I'm watching 30-minute tutorials trying to set up something called a chart of accounts, paying for features I don't understand, and half wondering if I should just go back to a spreadsheet. If any part of that sounds like the conversation already running in your own head, this is the video that settles it. Because underneath that frustration is a different question than the one all those tutorials answer. The tutorials answer how to use QuickBooks. The question that actually matters first is whether a business like yours needs QuickBooks at all, or whether you're about to start paying every single month for a tool built for a company 3 sizes bigger than yours. By the end, you'll know exactly where you stand, what QuickBooks really does. In plain words, an honest test for whether you need it or whether it's overkill for where you are right now. What it actually costs in 2026, including the change that landed this year. And if it turns out not to be the right fit, the cheaper place is worth looking instead. Part of what makes this so hard is that QuickBooks barely feels optional in the first place. It runs about 80% of the small business accounting market in the United States. So the second you start asking around, your accountant, a friend with a business, some thread you found online, they all point you to the same place. And after enough of that, you stop feeling like you're choosing anything. You're just doing what everyone told you to do. But everyone using it doesn't mean everyone should. About a quarter of small businesses still don't use any accounting software at all. They're running on spreadsheets, on paper, on a folder of receipts they open once a year and hate every minute of it. Some of them are genuinely fine that way. Others can feel themselves falling behind and just can't tell whether fixing it costs more than the problem does. And the owners who do pay for it aren't exactly happy about it. Spend any time where they talk honestly, and the same complaints come up over and over. One owner called it a roach motel, the kind of place where they let you in and then you can't get back out. Another said they charge you for every time you breathe. One person who'd paid them loyally for years said it felt like buying a new math textbook every single year. Basic math doesn't change, he said. And as far as he could tell, accounting doesn't either. These aren't people who hate technology. They're paying customers telling you what it feels like once you're inside. And the money part is real. QuickBooks has raised its prices every year for the last 5 years. The base cost of its plans has climbed somewhere between 50 and 80% over that stretch. That's 3 to 4 times faster than regular prices have gone up. Then, in May of 2026, every plan jumped again, 15 to 25% in a single move. One owner put the feeling better than any chart could. They raised the price twice in under a year, he wrote, and I'm only now realizing how much it's actually costing me. That slow, sinking realization is exactly what's pushing so many owners to finally stop and ask whether they need this at all. So, before you decide the spreadsheet is the safe, free choice, know that there's a cost on that side too. When you track everything by hand, things slip through. Owners who keep their own books by hand tend to miss a real chunk of the deductions they're allowed to claim. Usually it's something small, a receipt that went missing, an expense that never got written down. On a business, doing $100,000 a year, that can quietly cost you thousands at tax time. So the spreadsheet was never really free. The bill just shows up somewhere you weren't looking. If you're feeling pulled both ways right now, the price on one side and the worry about falling behind on the other, that's actually a good place to be standing. It means you've stopped just doing what everyone told you to do, and you've started asking the real question. So before you decide whether you need it, it helps to know what this thing actually does. In plain words, without the vocabulary that makes everyone want to close the tab. Start with what your books even are. Your books are just an organized record of money coming in and money going out, kept so that you and the tax office can see what really happened over the year. That's all they are. That folder of receipts is a version of your books too. It's just a bad one because nothing in it is sorted and you can't answer a single useful question by staring at it, which is exactly why that owner only wanted three things. Am I profitable? Where is the money going? And what are my margins? Good books answer those questions. A folder of receipts never will. Now, what does QuickBooks do? It connects straight to your business bank account and your cards, and it pulls in every transaction automatically as it happens. Then it sorts each one into a category, the same kinds of categories the tax forms ask about, and it turns all of that into simple reports about how you're doing. So instead of typing every transaction in by hand, you open it up and the transactions are already there, already sorted. There's one bit of jargon you'll trip over the moment you open it, and it's worth 30 seconds because it sounds scary and isn't. A chart of accounts, all that means is the set of buckets you sort your money into. Rent is a bucket. Supplies is a bucket. Sales is a bucket. That's the whole idea. The only reason it feels intimidating is that nobody ever just tells you it's buckets. There's also one real piece of vocabulary that changes which version you should even look at. Proper accounting software uses something called double entry, which records both sides of every transaction so the books can catch their own mistakes. It's the thing that makes the numbers trustworthy. This matters because QuickBooks sells a very cheap starter plan called Solopreneur, and that plan doesn't actually do real double entry. It's closer to a fancy expense tracker. If you want QuickBooks doing the real job people praise it for, the actual starting point is the next plan up, called Simple Start, not the cheapest one on the page. And then there's the real reason QuickBooks became the default, and it has almost nothing to do with the software. For decades, the company trained and certified accountants on its platform, so today most tax professionals in the country work inside QuickBooks every single day. You can hear it in how owners talk about it. One person called it the worst product they'd ever used, and then admitted in the very next breath that they only keep it because of their accountant. Hand your accountant a clean QuickBooks file at tax time, and the whole thing is easy. Hand them a homemade spreadsheet, and a lot of them will charge you extra to untangle it. That quiet network of accountants is a big part of why every road keeps leading back to the same place. Now you know what it is. Working out whether you specifically need it comes down to a short, honest test you can run in about 10 minutes at your kitchen table tonight. The first question is the simplest one. How big and how complicated is the business right now, honestly? Picture a solo operator bringing in under a couple $1,000s a month, one bank account, no employees, no inventory, mostly selling their time. If that's you, a clean spreadsheet or a free tool is genuinely enough. You haven't outgrown the simple setup yet. Paying $400 a year for accounting software would pull money away from the part of the business that needs it most, which is finding your next customer. There's no shame in being here. Plenty of healthy businesses stay at this stage for a good while. The second question is the one that changes the answer for most people, and it has nothing to do with the price tag. It's about what your time is worth. Add up the hours you lose every month wrestling with your finances. Updating the spreadsheet, hunting for receipts, checking the bank, getting things ready for taxes. Say it comes to 4 hours. If your time is worth even $75 an hour, that's $300 of your month going into a job you don't enjoy and probably don't do well. Next to that, a subscription that runs $40 to $75 and hands most of those hours back stops looking like a cost. It looks like the cheapest help you'll ever hire. The third question is really a short list, and you only need one yes. Have you incorporated, so you now need a proper balance sheet? Are you registered to collect sales tax? Do you have employees and run payroll? Are you carrying inventory? Has the spreadsheet started turning into a mess every time the business grows a little? One owner said the line perfectly. Once you need invoices, payroll, sales tax, or more than one person touching the books, that's usually the point where software or a bookkeeper becomes the cheaper option. Any single yes on that list is your business telling you it has outgrown the folder of receipts. If you've decided you do need it, there's one more step, and skipping it is exactly how people end up overpaying. Match the plan to your business. instead of reaching for the one everyone names. The lower plans cover a solo owner or a simple service business just fine. The middle plan adds the ability to manage bills and bring in a few people. The top plan exists mostly for businesses tracking inventory or project profits. A lot of owners get talked onto that expensive top plan and then never track a single item, paying every month for a room they never walk into. And if you already work with an accountant, ask them one thing before you buy. The right answer for you is often just whatever makes their job at tax time easier, because that's the relationship that quietly saves you the most money in the end. Even once you've made the right call, there's a handful of mistakes that quietly cost owners time and money. Almost every one of them shows up over and over in the stories they tell. Knowing them ahead of time is most of the battle. The first is buying QuickBooks before you actually need it. It feels responsible, like you're finally taking the business seriously. But if you're paying $400 a year for software a spreadsheet could handle, that's money that could have gone toward finding your next customer instead. The second is the opposite problem, paying for far more than you use. This is the owner sitting on the top plan for inventory features the business will never touch. Dropping down to the plan you actually need can save more than $2,000 a year without changing a single thing about your day. The third is the one that stings the most to hear because it's so common. Owners buy QuickBooks, connect it, and then use it like a slightly fancier spreadsheet. They never reconcile, never set up the workflows, never let it do the job they're paying for. If you're going to pay for the tool, it only earns its keep when you actually let it work. The fourth is mixing your business money with your personal money. And this one is bigger than it looks. When everything runs through one account, your numbers stop telling you the truth about whether the business is healthy. Worse, if you set up an LLC to protect your personal savings, blending the two can break that protection. That means your house and your savings could be on the line if anything ever went wrong. Keeping the money separate is the simplest, most valuable habit there is. The fifth is treating the books as a once-a-year tax season chore. And the stories about this one are painful. One owner found an accountant just 2 months before taxes were due and discovered they had 7 months of catching up to do first. They called it a nightmare. That's what waiting looks like. The owners who avoid it are the ones who let the software pull transactions in every day, so the work becomes a few minutes a week instead of one miserable weekend. The sixth is skipping reconciliation, which is just the habit of checking that your books match what the bank actually says. Skip it, and duplicate charges, billing errors, even outright fraud can sit hidden in your numbers for months while you make decisions on figures that were never real. The seventh tends to ambush newer businesses every January. You pay a contractor through the year, you never collect their tax form up front, then at filing time, you're scrambling to track people down and piece together what you paid them. Good software quietly stores all of that and produces the forms for you when the deadline comes. And the last one is the most dangerous because it can sink a business that looks like it's doing great. It's confusing profit with cash. You can look profitable on paper and still not have the money to make payroll because your cash is tied up in invoices customers haven't paid yet. Watching what you're owed and what you owe side by side is what keeps a growing business from getting caught short at exactly the wrong moment. So let's bring this together. Everything we just walked through, you can do by hand while the business is small enough. But once the spreadsheet can't keep up with more customers, more bills, more rules to follow, the right software does all of it quietly in the background, and you get your evenings back. If you've reached that point, 3 names are worth knowing. QuickBooks is the safe default, and it's the right pick if you work closely with an accountant or you're planning to grow into something bigger. Xero is the strongest alternative, and a lot of growing teams quietly prefer it. It lets you add as many users as you want on every plan, and it's easier to find your way around. Plenty of owners who got tired of the price increases have moved over and haven't looked back. And if your needs are still simple, there's a lighter, cheaper lane worth a look. Free tools like Wave for straightforward solo books and FreshBooks for freelancers who mostly send invoices to clients. And there's one more lane worth knowing about, because it barely existed a couple of years ago. A lot of you already pay about $20 a month for a general AI tool, ChatGPT, Claude, or Gemini. Those have quietly gotten good at the grunt work of bookkeeping, reading a stack of receipts, sorting expenses into categories, drafting the invoice reminders you keep putting off. One solopreneur described connecting Claude straight to his bank and his QuickBooks. Now, in his words, he just tells it what needs doing and reviews everything before it goes out. And if you're the technical type, or you know someone who is, you can take this further. You can have these same tools build you a simple setup of your own, something that turns your messy records into clean numbers your accountant can actually work with, for a fraction of what the big software costs. Two honest warnings, though, and the owners actually doing this are the first to give them. You have to check the work. Every one of them says the same thing, that they look over the output before they trust it. And money makes people nervous in a way that emails never do, so most owners ease into this slowly. For now, this isn't a replacement for QuickBooks for most people. It's a real option that exists in 2026, and it's worth knowing it's there. There's no single right answer here, only the one that fits the business you actually run. Full head-to-head breakdowns of these are coming, so you can see exactly which one matches your situation before you spend a dollar. Before you close this, here's how to turn it into something real, starting tonight. First, run the 10-minute test on your own business. Be honest about your revenue, how complicated things really are, and the hours you're losing to your finances every month. That alone tells you whether you need software yet, or whether you're fine right where you are for now. Second, if you're already paying for accounting software, pull up your plan this week and ask one question. Am I using what this tier gives me, or am I paying for a room I never walk into? A 5-minute look could put a couple $1,000s a year back in your pocket. Third, whatever you decide, pick one habit to start right away. Open a separate bank account for the business if you haven't already. It's free, it takes 20 minutes, and it quietly protects everything else. If this made the decision clearer, the next video puts the two strongest options head-to-head, QuickBooks and Xero for a small business. You'll see exactly which one fits before you commit. Subscribe so it lands in front of you when it's ready. And before you go, leave a comment with what you're using to handle your books right now and the one thing about it that's driving you crazy. Every comment gets read, and the honest ones are what shape the videos that come next.